let's move on to Paulina here, and Paulina Klotzbücher. She is the Group Chief Commercial Officer at Travelstart, and she's got 10 years of experience in travel technology now, and 16 years in e-commerce in Africa. She's held numerous, executive titles, with Travelstart, including CTO, CDO, Managing Director, and CMO, and whatever else there is to see in front of. And she's super passionate about, new frontier type technologies, and is always a fearless leader in business development. And her latest project that she's spearheading now is a group payment initiative called Glide, where she's the founder and CEO, and she plows down all her energy and time into this. So Paulina, over to you to talk about payments.
Thank you very much for that amazing introduction, Stefan. Good morning and welcome to the payments discussion. So far, no travel conference is ever truly complete without a chat about payments, and rightly so. This area costs our industry between 5 and 7% of revenues, and that is depending on where you are in the value chain. In travel, we may have massive basket values and high cross-border volumes, but we also have relatively small margins. Additionally, the collection from customers is often completely separate from the settlement of these funds within suppliers. This means that if you don't get this area right, you're going to land up having a huge impact on your liquidity, your cash flows, and ultimately your profitability. So on that note, I'd like to introduce you to some peeps who really know what they're talking about. We've got Andrew, the Harvard-educated young COO of Stitch, an up-and-coming startup focusing on B2B services in the payment space, such as instant EFT and FICA verifications. We've got Theresa, founder and serial entrepreneur of Nightsbridge, a PMS and channel management solution, and PayBridge, which supports the collection and disbursement of funds to thousands of hotels across Africa. And last but not least, we have Virginia, the VP of Product Management at Mastercard, who understands the technical and process inefficiencies inherent in our industry and works at Mastercard on innovative solutions to help us solve these problems. Okay, so on that point, let us slide on into the Q&A. COVID came, and unfortunately, like a guest that would not leave, still seems to be hanging around while you're doing the dishes. And with it, it has brought a massive transformation to the digital payment landscape. Virginia, what have been some of the biggest changes and developments in the last 18 months? And is there anything that has truly, really surprised you?
Hi, Paulina. Nice to see you and glad to be here. I think all of us have lived through what I'm about to talk about, and that's that the pandemic made us act differently and think differently about the ways we want to transact. We couldn't visit physical stores or restaurants. We couldn't travel. We avoided physical contact. And in many markets, that's still happening. And so one thanks that we can give to the crisis is it has compressed what we predicted was going to be a 5-year journey into less than one, which is to move and change behaviors overnight around contactless, touchless payment technology, aka using Apple Pay or other Android wallets. And we all became comfortable with e-commerce. And what has resulted is that we realized that there are better solutions that feel safer, payment solutions that feel safer and are more efficient and convenient to us. And that's a trend that's going to stick and carry on, hopefully once the virus has left.
That's so true. My online bills have definitely gone up during the pandemic. There's nothing like seeing a whole bunch of delivery boxes coming up and down the elevator to everyone. So I think that you are 100% right. That adoption has been massive. Andrew, you're one of the up and coming startups that's taking advantage of these changes and these opportunities that Virginia is talking about. What are some of the core problems that you're working on solving, specifically for those of us in the travel industry?
Yeah, that's a great question. And thanks again, Paulina, for the invite here. Really excited to be here and to be speaking to everyone about some of the payment problems that we see. I would say one of the biggest ones, and probably one of the ones that affects travel most consistently, is the requirement for localized payments, right? Particularly across multiple jurisdictions where you're operating a travel agency to and from different locations, right? The requirements across Africa as a continent, particularly, are quite high, right? Stores of value and how people prefer to transact are extremely habitualized and super geographically constrained, right? And so to be able to even operate a payment gateway, you have to manage like 30, 50 different types of integrations with providers on a country by country basis. And so particularly when COVID struck and people were forced to use online channels rather than opt for physical channels for the purchases of cross-border items such as flights, right? I think it became very critical for businesses to find solutions to easily integrate with multiple payment providers at the same time, or to be able to receive funds directly. And so a lot of what we work on as a startup, right, and what we enable for financial technology companies and payments companies more generally, as well as merchants that need to transact online, is to be able to build these very complex integration stacks for accepting payments in a couple of weeks rather than over years of development. So yeah.
That's a very good answer, Andrew. And I must admit, so relevant when we were integrating payment gateways as we're expanding across Africa. I think at one stage we hit about 16 payment gateways integrated for the group. So that was insane. I felt like we were almost a payment switch ourselves. Yeah. Theresa, over the last few years, you guys have gone from being a PMS and channel manager to also providing these critical and much needed payment services to your thousands of guest houses. What drove this decision? What are some of the complexities in the payment landscape that your establishments have to deal with? And how have these been exacerbated in the last 18 months?
We've been doing payments for quite a while, and the reason we got into that was just, you know, to solve a problem. That's what entrepreneurs do, right? It's the only reason to do business, is trying to solve problems for your customers. So we never meant to do payments, but when we went looking for a partner, we actually couldn't find one. And the problem for our clients were they were generally smaller. They found the cost of getting their own merchant account with a bank exorbitant. So we tried to see what we could do to make that easier for them. So we basically started with similar to our own payment gateway, built on the iVery platform initially, but we also linked to many other gateways. And the issue was just, cost, that it was very tough for them, and accessibility. As a small business, you had to also provide so much documentation to the bank in order to be able to get your own merchant account, that was really not attainable for most small guest houses. So the complexity is, I think, very much what Andrew alluded to, is that there's different rules, and not even different rules, almost like a different game in every country that you are trying to work with. I think we were one of the very first people to offer online payments in Kenya. And, that was kind of almost was a little bit of a back office manual processing that nobody was aware of, but it had the effect of being able to do the online get deductions. And we also ended up with something like 8 gateways that we had to connect to in Kenya. So I think it's building these integrations, trying to create a platform that has all of the puzzle pieces fitting together, while making it easy enough for the end user, in this case a small B&B guest house or hotel owner, to understand and use on a daily basis. So I think the complexity for all of us in this space is how different systems and solutions can talk to one another to create a great experience for the end user, both the customer and the provider of accommodation or travel.
Oh, no, that's, you guys have done an incredible job with the PayBridge solution, and it's incredible to see the new features and functionality that you guys are bringing out, and how excited the establishments are about taking on these solutions that you guys are providing. I mean, you really are providing, solutions to so many areas that I didn't even know that there were problems in. I don't know if there's any that you want to specifically mention that you haven't talked about already.
Well, we during
You've got some
COVID,
stuff
because I know that is part of the discussion we're having is what's happening.
Okay. No, then we'll leave it for a little bit later.
Okay.
Okay. Andrew, you work in the B2B space, right? So tell me a little bit, because you keep your ear to the ground and you know what's kind of rustling in the news. Tell me, there's a massive adoption in terms of wallets and super apps across Asia. Do you think we're going to see a similar adoption in South Africa and Africa in general, or do you think that we're not really in a position to kind of take in the same advantages like Asia has? And what are the biggest blockers to adoption in our markets?
Sure. Yeah, that's a really great question. And I was having a similar discussion with a colleague about this 2 weeks ago. I don't have a crystal ball, so I don't really know what type of super app or form that ecosystem might take. But certainly when we look at the businesses that we serve and that we provide financial technology capabilities to, a lot of very distribution heavy, I would say, physical channel for businesses such as your ShopRights of the world, Pick and Pays, your Travelstarts, like everyone that has a massive distribution network with customer acquisition already built into their models are looking for ways to build verticalized walletized offerings on top of that, right? If you own the customer for that transaction, chances are you'll want to own that customer for a lifetime value that supersedes the product that you're selling them at interaction X, right? And so certainly, whereas I don't think that there is like a winner takes all dynamic that's common in Africa, given how fragmented consumer purchase behavior is, as well as how highly localized it is still to this date. I do still think that large retailers, large FMCG companies, large companies, just generally that have high numbers of payments touch points with customers will look to begin to generate and monetize off of those touch points by capturing more value of the customer and literally capturing more share of wallet, right? I think something that Theresa spoke to, which is the fact that, in a lot of cases, you've already built these stacks, you've already built payments platforms, you've already built the ability to connect with these people, right? The ability to just walletize their deposits is just simply the next logical step, right, to ensuring that more of the consumer's value is spent within your ecosystem. So I do see like the trend of more super app light business models. Whether or not one will emerge as like the king or queen of all super apps, that's to be determined, I think.
Yeah, it's true. I mean, I'm seeing so many fintechs, specific telcos and banks. They all seem to be wanting to play in the super app space. And we'll see how well they do it. But I keep seeing news reports about a new one being launched every few months. So it's going to be really interesting because they have the customer base. So let's see what they do with it. Okay, but talking about exciting new things coming out, buy now, pay later. Okay, this is another area outside of wallets that everyone is super hyper and excited about. And anyone who reads the news, I mean, the valuations are insane, like Afterpay, Klarna, it's like unicorn season gone crazy. So Virginia, buy now, pay later, hot or not, and why?
Yeah, so we're saying hot. Mostly globally, this is everywhere. The consumer interest is rising in what is essentially a payment plan. They want to buy now, pay later. Previously, they might have just been browsers. Now they can become buyers. And that's really attractive to the younger consumer who may not have a lot of cash flow available to them, but still want to keep up with the latest trends. They still want to travel. They still want to buy fashion, beauty, etc. And it's the trend is because they're now so much easier to manage thanks to these online players, these buy now, pay later platforms. They're being offered through online channels, through the e-commerce portals, and that seems to be making it simpler for consumers to understand these kind of loans or lending infrastructures. So we think it's likely to continue to gain traction. So we've also developed our own Mastercard solution that's being rolled out to try and make it more widely available through banks, through fintechs, through wallet providers, because that's what the consumers are asking for. So yeah, hot.
Okay, Theresa, hot or not?
I'm going to say lukewarm, like my geyser warming up after a blackout. And the reason for that, I think it's great for the traveler, that it's really the means to then be able to have affordable travel, do affordable travel. The reason I'm not entirely hot is, again, is that last mile, getting it to the end consumer. How does one work with different travel platforms, and then actually make sure that the user or the person you're paying in the end actually knows how that payment is getting to them and when it's getting to them. So it's always, I think, it's again, once one's working over multiple platforms and with integrations, it's, the concept is great, but the nitty-gritty of getting it out to everybody so that everybody can talk to one another once again is kind of the complexity. So it would be great if we could solve that.
Yeah, the theory versus the reality. Andrew, over to you, hot or not? What do you rate it as?
I'm definitely going to say hot. I think we see a ton of people, particularly our customers, requesting to build their own buy now, pay later products on their own platforms. And that's actually like something that we've, over the course of the last few months, seen a ton of increase of demand over. Right? If you think about these companies building financial technology applications on their platforms, they have a ton of the data about customers they would already need to qualify an individual for a point of sale loan, right? And whereas other sort of point of sale credit offerings are third party in nature, right? You have to go and strike up an arrangement with an issuing bank or work with a credit provider to provide some sort of lay-by loan. A lot of times today, right, with direct connection to banks and other financial institutions, many of which we can provide, right, a lot of brick and mortar retailers can actually build on their own platforms a form of a white labeled buy now, pay later product directly for their own customers. Because they own the customer data, because they also own the payment rails, they can set up their customized buy now, pay later regimes and programs on a SKU level, on a per product basis. And I think that is actually truly quite revolutionary, right? You go from a world of very generalized and very, I would say, high interest credit into a world that's very specific and very product driven, at least for customer purchases. And I think that in itself is quite novel and revolutionary. And we'll definitely see a ton more of that.
I think, one thing that I'm learning in payments is that regulation is like such a big thing. So I'm wondering like what the regulatory side is how it's gonna hit and clamp down, because right now, you can kind of go crazy with your credit there because it doesn't fall under the National Credit Act. So it'll be really interesting what the next few developments are in that space, but it is a really exciting space and definitely really exciting when you see all the valuations and the adoption. It's just amazing. But if payments and travel are complicated, and we know they are, then we can definitely agree that payments in the travel management with travel management companies are the most painful. So Virginia, what are the biggest gaps currently in payment solutions in the African continent that would ease the load specifically for TMCs? And what do you think has prevented the rollout of these in the past?
So I think one thing is for certain, that there are no shortage of payment or payment solutions that exist that could deliver value to TMCs in Africa. And we know this because of the adoption we see in other markets. I mean, Theresa's talking about integrating to multiple gateways and offering payments as a solution. So the technology exists, but I think the biggest thing we have to solve for is ensuring that the players in the environment understand the benefits that these products can bring. So I think we have three big tasks ahead of us that need to motivate the industry. One is we need to move faster to scale those solutions out across multiple markets. This is hindered in Africa because of the regulatory environment and each market is so specific in the way that we have to interface with it. So that, that's a challenge for us. That's a challenge that Andrew was mentioning. It's a challenge for banks who want to start adopting these products. But we have to kind of cookie cutter our approach, and we have to go into those markets in greater scale faster. Then we need to enable the infrastructure around those payment products. So we have the GDSs, we have the hotels, we have the airlines. Unless those entities are part of the ecosystem and enabling the receipt and the use of these solutions, we won't be able to get the TMCs access. And so, we also need to get them access without a huge investment required by them. That's for sure. And then finally, we have the education side. So you have the corporates who are crying out, preferring credit periods from TMCs because that's what they're used to. We have TMCs with the sort of scared nature around use of cards because of the risk associated. So we have to educate around the fact that these solutions can make payments quicker, they can ease reconciliation, they can enhance safety and security as long as they're deployed in the right ways. And I think one of those ways for me would be to leapfrog physical cards on file and go to virtual, single use, system to system type infrastructure, but we need to start moving toward delivering that user experience.
I agree with you wholeheartedly. Theresa, you work with multiple channels, and that includes TMCs. What in your opinion, would ease the burden for all of those involved in the entire corporate travel ecosystem?
Well, it's once again, a solution, a payment solution where everybody is assured that they are getting their share of the little bit of travel spend. I think that's what's so difficult. We found, especially with corporate travel, that you have a traveler going out and you can't necessarily give everybody who's going a credit card, because we think of business travel as somebody with a briefcase, but business travelers are also people who are drivers and delivery people, and so for a company to issue thousands of cards is quite difficult. So I think as we're moving towards apps that are a lot more accessible for people by phone, that just makes it easier for them to be able to transact. So it's kind of getting everybody into the ecosystem, all of the different players, because it's not just your travel ecosystem, it's also people who then want to eat at a restaurant or get their food on the road if they're traveling as a business traveler. Mm-hmm. So we see that it's very easy, as an example, to be able to do the payments for the accommodation, but it's much more difficult to then get those payments for what people call extras, whether that be then laundry or any other services, parking or food. The other complexity, of course, is the commissions, that how you split those. So some unifying technology would be great, but again, one size doesn't fit all. So that kind of ecosystem, I think, that people can sort of plug in and out of is hopefully where we're moving towards as we're getting better and better at integrating and connecting.
Oh, that's so true. And I think in line with what Virginia said and yourself, a large part that is also the fact that these margins are so tiny that we work with. And now we're adding more technology, and now that's also eating away at this margin. So, cost is also a big factor, especially when you bring in European solutions. I always ask for African pricing. It's like I do my speech about how much a cappuccino costs in Europe versus in Cape Town. So, yeah. I think that's also a little bit of a problem, but okay. So little fun question. If you could solve only one problem in the payment space, what would it be and why? Andrew, let's start with you.
Sure. I think something you'll see operating off of bank rails, which is what our products do. They move bank transfers seamlessly for various businesses. One of the things you see on a country and jurisdiction by jurisdiction basis is that the rails themselves are super different between countries. Right here in South Africa, you have an EFT system that essentially takes 18 to 24 hours to settle. In the United States, that takes 3 to 5 days. In Nigeria, it's instant, right? And so you as a company, either issuing collections or you as a payments processor operating on those rails, have to be really good at harmonizing your payments operations as well as your cash flow to meet the different settlement timelines, as well as to operate effectively on different settlement timelines on a country by country basis. And so I would say that like the unification, or at least the presentation of unified settlement timelines, right, solving for some of these cracks, I would say, that differ and diverge on a country by country basis, is what we're in the business of doing. I think it's one of the central reasons, right, why cross-border payments are so hard today. So yeah, that's the one I would talk about.
Yeah, real-time payments. That's a whole story on itself. I mean, the fact that we don't have it in 2021, real-time settlement is, yeah, it's insane that we're still talking about working days. Theresa, One thing, quickly, what would you solve if you had one thing to solve in the payment space?
And my wish list for South Africa would be to see a huge reduction in exchange controls so that it just becomes easier to move money. And I think some deregulation to make these rails that Andrew talks about more compatible. So we need to see those getting joined.
From your lips to the Reserve Bank's ears, I heard. Virginia, you?
A big thing we're focused on, I agree with both of you on your points, so I won't reiterate, but the people getting paid, whether it's a hotel, car rental, airline, we're really focused on looking at their end-to-end business to drive value. So think about their businesses when they get all these payments in. They have the problem you have on the front end, on the paying end, just amplified. So how do I reconcile that payment? How do I process it in my accounting, whether it's card, account to account, Swift? So we're really focused on automating these payments straight through to their whatever system it is that they're operating on, property systems, ERP systems. And that's something that's going to, I think, drive the difference in value when it comes to B2B payments operating correctly.
No, I agree 100%. And on that, unfortunately, we are out of time now. And I want to thank you all for participating in this panel. Really appreciate it. And we'll be right back after this brief commercial break. So I'm handing over back to the studio.
Thanks, Paulina. Thanks, guys.
All.